Well, hello and welcome to another video from Real Tail Trader. My name's Simon Gray and it's the 1st of the month today, 1st of May, so all's flat in terms of performance for last month. Just got a couple of trades that are working their way out, but at the moment I'm on about a 58% win ratio and about a 10% return on capital, so pretty good. A couple of trades that need to that I started last month in April that need to come to conclusion, but they'll either add or take off slightly to that number. But about a 58% win and 10% return on capital, so pretty pleased with that. But of course we're into 1st of May, pinch punch, 1st of the month, and I've got some things to talk to you about today. The first thing I wanted to talk about was the difference between certainty and probability, and why trading is all about probability. Yesterday I took a loss on a pound dollar short trade, and I could have, I took this loss. I could have, moped about and got upset about it and been distracted from what I needed to do next. But actually, having taken this loss, my stop loss took me out. It presented me with a couple of other opportunities that I took, which are now in profit. So the loss I took yesterday, now I'm ahead of the game, back in the game, and up on where I was in terms of that loss. And I'll jump into the charts now and show you what that's all about. Okay, so here we are in the charts, and as you can see here, my full house strategy yesterday didn't yield a successful trade. Effectively what happened is I put a short position on here. The market really didn't go anywhere. There was a sharp reversal here, back up, and I was stopped out at this level. This is just me potentially, let me remove that, setting up a long opportunity. This is my up cross strategy here. So oftentimes I've got a couple of strategies that allow me to take a trade in either direction at any point in time. I don't have a bias on long or short. A common thing that you see common thing that you read if you read currency trading books or forex trading or just general trading books is the statement that your first loss is your best one. This was the level that I believed I would be wrong, which effectively was 20 points above the signal candle. As you see, if I'd have held on to that, thinking that my losing position would ultimately turn into a winner, it would have cost me a lot more. So first loss is usually your best loss. Now, sometimes when you're in a trade and you lose, then you can feel pretty disgruntled about it. We all do, but it's important not to get emotional, because this is not a game of certainty. When I put this trade on, I've got no clue whether it's going to work or not. I have an edge. I followed my rules, and there was a probability that this trade would work. If I jump out to the daily time frame, you can see here we were testing the 200 simple moving average. So it was a reasonable proposition in line with my edge that this market will continue downwards, but it didn't for whatever reason. Could have been news, could have been anything, doesn't really matter. The important thing is that I got out, and the important thing is that I didn't get emotional about it. I looked for the next opportunity, and that I think is one of the differences between successful traders and losing traders. The losing trader maybe would have moved the stop, trying to stay in the position, instead of saying, well, okay, that's fine, I'm going to cut my losses short, I'm going to get into something else or look for another opportunity. So what I did yesterday when I was stopped out, and I was stopped out at around, just probably about 3-4 o'clock, something like that. What I did is I looked for another opportunity, and I check my charts every 4 hours. 10 o'clock in the morning, 6 o'clock in the morning, 10 o'clock in the morning, 2 o'clock in the afternoon, and where are we? Lost my train of thought because I'm trying to do two things at once. 6 o'clock and then 10 p.m. Sometimes I don't really do too much at 10 p.m. The market tends to have quietened down. What I'll do at 10 p.m. is just protect myself in case there's any news or anything that happens overnight. So I'm looking at these charts. I look for the next opportunity. In fact, when I took the opportunity, I'm going to show you in a moment. In fact, here it is. When I took this opportunity, let's have a look at what time that was. So I took it around about here. I had an inkling that my pound dollar short was going to be stopped out. It hadn't been stopped out as yet. But if you look at this, this is the Japanese yen pound, so long pound here, short Japanese yen. What I did, this is a range trade strategy, so one of my other strategies. You'll see here, test of the bottom of the range, test of the bottom of the range, test of the bottom of the range. What I was looking for is more upward momentum above the daily 200 simple moving average, this blue line here. And what happened here, I bought on this XY candle signal here. The trade is then being profitable. I've put in a target here to take off half of my position just underneath the 240 200 simple moving average. We're not quite there yet. No reason to panic yet. If this starts to turn around, I may take some of that position off now. I've rolled my stop to break even. The reason I've done that is because the 50, the pink line here, the 50 simple moving average is giving me support. And in fact, there's a couple of strategies playing out here. There's a range buy on the bottom, and also there is an up cross strategy where my 10 exponential moving average crosses my 50 simple moving average, which is flat or upward sloping. So I'm pretty confident that this trade has more upward momentum, but again, I don't know. So this trade now has paid for the loss yesterday. The other thing, of course, that I had on yesterday was my Euro GBP short. Now on this trade, we'd traded down, so this is pound strength yesterday. So although I lost on the pound dollar short, effectively I gained on my short position here, which was buying the pound. And what happened here yesterday at 6 o'clock is this bar closed underneath the 240 200 simple moving average. That is, according to my rules, is a signal to buy more, to sell more. In this case, I'm short, so I add it to my position, roll my stop. So I now have the same risk as I had when I sold up here. Where are we? When I sold here, where are we? Yeah, same risk as I had when I sold here, but I have a bigger position. So I'm looking for more downward momentum. I'm going to take off some of the position here, but there is a distinct possibility we may get down into the lows here on this range, because this range is fairly uniform. Yeah, it's a fairly uniform range. We're just testing the daily 50 simple moving average here. If we close below that, I think that's a really good sign that we're going to go down to the bottom of this range again. Although the Brexit stuff is in the news constantly in the UK, for some reason people are buying the pound. I don't need to question it. I don't need to take notice of the news. All I need to do is to observe the price, and you'll see on this bar yesterday had a YX signal. That's a strong short signal there for me at the top of the range. So there's lots of good reasons for me to be holding this position and to be patient in this position. Overnight, not a lot happened, but we're still below the 240 200 simple moving average. So let's see where we get to. The other couple of things I've got on at the moment are pound Aussie dollar. Now I was in this trade last week. Effectively, I bought here on the cross, the up cross. We went up. Yeah, I got stopped out here. We couldn't break above the 240 200 simple moving average. But this candle here, we broke up strongly. This was yesterday. This is when the activity in the pound seemed to kick off. And what I've done now is I bought this again. I put my stop underneath the 240 200 simple moving average, which also allows me to put my stop underneath the daily 50 simple moving average, which is sloping upwards. So again, according to my rules, there is an opportunity for me to get back into a trade I've been kicked out of. This is my trend trade. These exponential moving average and simple moving average are still valid, and if I get up to here, I'll have a one-to-one risk reward, and I'll hold the rest of the position having taken half of it off. So that trade is working quite well as well. Then the other opportunity I've got on, which is kind of testing my entry but I'm not too concerned. If this is the Swiss franc Japanese yen, so I'm short Swiss franc Japanese yen, means I'm buying the yen and selling the Swiss franc. Now this has been in a downward trend since here. You see YX signal here, YX signal here, X signal, bang, down into this level here. Now I shorted here on a full house strategy. My full house strategy basically means that all the simple moving averages and the daily 10 exponential moving average price is below it. So on all the moving averages, on all the time frames, weekly and below, so that's weekly, daily and 240 hourly chart, we're below the important averages, which kind of tells me that the trend is down, and visibly you can see the trend is down here. Now starting to get a bit of support here. You'll see on this candle here we failed to close below that level. This could have encouraged some people to start buying here, but I'm still confident in this trade. I'm confident in this trade because my 10 exponential moving average is not crossed back over my 30 exponential moving average. My 50 simple moving average is still pointed down. This is kind of the place where I call it a trend continuation trade. What you tend to find is sellers will come in here, they'll push the market down further, they'll take some profit. These are short-term traders. The market will then go back up, and then new sellers will be encouraged to come in, hopefully then to come down here. So just monitoring this trade. Obviously if we get up here, I've got a stop loss that will take me out. Again, this is down to probability. So, you know, with a 58% win ratio last month, or about that, a couple of positions to close out still, providing on that 58% of winning trades, I hold for at least 2 to 1 in terms of reward to risk, and on my losing trades I get out at 1, then that's a very, very profitable strategy. Doesn't mean every trade is profitable. Some of my trades I will lose on, every trader does, but my strategy, my edge is set up so that I know that if I cut my losses short and hold my winners as long as I can, at the end of the month there is a very, very good probability, because I know my probabilities, that I'll be in a winning, profitable position. That's really what this game is all about, in addition to money management and 1 or 2 other things. But that's the charts. I've got 1, 2, 3, 4 positions on. One of those positions is fully protected. That means I can't take a loss. My stop is at break even or better, and the other positions are I've got a stop loss in place. I've halved the potential loss, or took off a third of the potential loss on this trade by rolling my stop here. So we'll wait and see, and I'll be back. Obviously when these things start to play out to report on where we've got to. Okay, so there you have it. Some of the ideas and some of the trades that I'm in currently. As I've said before, don't take my recommendations. You know, don't follow my trading decisions. At the end of the day, your trading approach is very personal to you. It's down to your personality, what fits with your personality, and down to your rules, your edge that you set. And it's about executing that edge over time and understanding the probabilities associated with that. And of course, money management to make sure that you're protecting your capital, and when an opportunity does show up, you're taking maximum advantage of it. So that's it for this video. If you like what you've heard, like what you've seen, please click the button to subscribe, and also click the notification button, and I'll see you on the next video.